All right. Hello, everyone. Providence rent control and why every New England investor should be paying attention right now. I wanted to get on just to talk about a little bit about this because this doesn't just apply to Providence. This is a regional issue and naturally a reaction as affordability becomes more of an issue and as rents increase dramatically, due in large part to limited supply that we have up here in the Northeast. So, as you know, Providence is actively considering rent control. And while this conversation is happening here at the city level, the implications are much bigger than just Providence alone, especially if you invest or lend anywhere in New England for that matter. And we're going to cite a few examples specifically. So today I wanted to walk you through what's happening in Providence, why this matters regionally, what history tells us, and how investors and lenders should be thinking about risk before these policies change and what we can do about it now. So why does Providence matter right now? Let's start here in Providence, just because this is where it seems to be most urgent. So city leaders have been discussing rent control and expanded tenant protections in response to rising rents, low vacancy rates, and affordability concerns. While no final ordinance has passed yet, proposals being discussed typically include caps on annual rent increases, expanded eviction restrictions, mandatory landlord registration, which, as you probably know, we already have in Rhode Island, and additional compliance requirements. Some versions include exemptions like owner-occupied buildings or new construction, but if you've watched other cities, you know those exemptions can narrow over time. So for investors, the most important takeaway isn't the final language. It's that Providence is now a regulatory risk market, and that changes how deals should be underwritten for both you as an investor and for me as a lender. All right. So why this isn't just a Providence story, here's where this gets bigger. Providence is not an outlier. It's part of a broader regional trend, as you might know. Across New England, we're seeing increased political pressure around housing costs, especially in urban and coastal markets. So Massachusetts is actively revisiting rent regulation at the state level. It'll be a ballot vote coming up in 2026. For those of you up in Maine, you know that rent control already exists in Portland, and that other cities across the region are studying rent caps, moratoriums, and other expanded tenant protections too. So even if you don't own property in Providence today, it's a signal. Regulatory risk is rising across New England. So why does rent control keep coming up? Well, it's important to acknowledge why this conversation exists. Rents have increased meaningfully. Inventory is tight. Construction hasn't kept pace with demand. And from a political standpoint, rent control is appealing just because it looks like an immediate solution to the problem. All right. The problem is that housing markets respond to incentives, and price controls change those incentives in some predictable ways. All right. So what does history show us and why it matters? The good news is that we have some historical references and, more importantly, some very local historical references. I'll cite those here. We don't have to speculate on about how rent control plays out. We have some good data. All right. In cities that have implemented rent control, New York, San Francisco, Cambridge, Massachusetts, the pattern is very consistent. In the short term, some existing tenants can benefit because rent increases slow or stop. But over time, the rental supply shrinks. The investment declines, maintenance gets deferred, and market rate rents rise faster due to the even more scarcity of those market rate rents. In Cambridge, Mass, our most local example, which is particularly relevant, rent control suppressed values and housing quality for years. After it was eliminated, property values rose significantly and reinvestment followed. And so Cambridge is a perfect example of a market that implemented rent control, saw its failure, and then repealed it, and saw some improvements as a result, some significant improvements. All right. The lesson here isn't ideological, it's practical. Rent control shifts risk onto property owners and capital providers. So how does rent control affect values, loans, and exits? Now, this is where we start talking a little bit more about short-term lending options, financing, and those types of things. Rent control directly impacts your net operating income, and NOI drives value, as you all know. If rents are capped out but expenses continue to rise, taxes, insurance, utilities, labor, all those margins really begin to compress. All right, and when margins compress, cap rates expand, and when cap rates expand, values decline. So that affects refinancing. It affects DSCR, debt service coverage ratio. It affects exit pricing. And for lenders, this matters a lot. A deal that looks fine today can be problematic if future rent growth, which the takeout loan depends on, is no longer allowed. Okay. You might hear my kids in the background. They're just getting home from ski practice. So for lenders, this matters a lot. A deal that looks fine today can become problematic. All right, so what should investors be doing right now? So what should smart investors and lenders be doing? First, assess exposure, all right? Identify which assets or markets are most vulnerable to regulation. So if you've got property right here in Providence, you'll want to really evaluate whether or not you want to offload them or at least increase the rents now up to market value. And really take a good hard look at what kind of return they're bringing to you under this current market. I, for one, had a good 6-family property in Providence, and from one year to the next, the property taxes increased by 43%. And I could see rent control on the horizon. I was able to get a really strong price for it. I looked at my NOI for it, and it had gone down significantly, due in large part to the property taxes. So I sold it. I 1031 that money into a separate asset down in South Carolina, which is just a much better long-term hold asset for me now. I'm not saying that you should or have to sell your property in Providence, but you definitely want to take a good look at it. Okay. So you also want to underwrite conservatively. If a deal only works with aggressive rent increases, it's not a deal, it's a gamble. Third, pay attention to the asset type. New construction, mixed use, and commercial components may be treated differently than older residential stock. Oftentimes, these rent control regulations will exempt certain properties, maybe commercial, maybe new construction, and whatnot. Fourth, we manage leverage carefully. All right, so higher leverage and regulatory risk don't mix well. Liquidity matters more in certain environments. And finally, think regionally. One advantage of lending across all 6 New England states is diversification, but only if you actively manage where your capital is deployed. So if you're a lender out there and you're looking at Providence, you're going to want to really take a closer look at how conservatively you are lending within this market, given these potential changes. All right, so what does this mean for borrowers? From a lending standpoint, markets with regulatory risk tend to see lower loan-to-value ratios, which is sort of natural. You just want to be a little more conservative. Tighter underwriting, shorter terms, and more scrutiny around exit strategies. So not only do we care about lower loan-to-value, but we want to make sure that you can get out of that loan on the back end, whether it's selling it at a fair price, given the market, or you being qualified to refinance it with some other lender. Particularly given those other lenders also will have more stringent lending criteria. All right. So Providence rent control discussion is important, not just for Providence, but a signal for where housing policy in New England may be heading. This isn't about politics. It's about understanding risk and adjusting strategy accordingly. Smart investors won't panic, but they do adapt early. And now is that time to adapt early. If you want updates as Providence and the rest of New England continues to debate the rent regulation, just subscribe to this channel. And if you're evaluating a deal and want a conservative lender level perspective, feel free to reach out. I'm happy to look at a deal with you, whether it's Providence or anywhere in New England. And so I hope this helps. And if you have any other questions, like I said, feel free to reach out. Take care.